some people don't care about the very recent Silicon Valley Bank collapse and the government's response. However, as soon as I heard about SVB's takeover by the FDIC, I immediately thought of Dr. David Keynes. Not only has he been teaching urologists about personal finance for over 10 years, he's also the founder of Wellprept, a startup company that serves to make physician lives easier by optimizing patient education before the visit. I'm very happy that he agreed to discuss the SVB situation from his perspective. And as always, if you have any questions during this live stream, please leave them in the comments. Welcome, Dr. David Keynes.
Thank you so much, John. It's been great to be on this in the past. I feel even more honored to be on it again.
You are too kind. You're the first person I thought of, because you talk about finance, and I'm sure you thought about, okay, well, what is that doing for me personally in my portfolio, but more importantly, your startup. So tell me about Wellprept. I know you just finished the seed round funding. Tell me more about what was going on through your mind as SVB was being taken over and shut down.
Yeah, so I had a terrible weekend. Okay, I had a terrible weekend. So let me just very brief backstory. By now, if you've read the news, you know that the FDIC insurance limit is 250 grand. Very few of us have 250 grand liquid in our checking account, right? As it turns out, many businesses do. And most of those businesses, if they're anything related to tech, were banking with SVB. So as you mentioned, Wellprept raised a seed round, and SVB was the place to do that. If you were giving people wire instructions in a seed round, having it land at SVB lent some legitimacy to the whole process. And not just that, SVB had incredible customer service and ancillary support. They knew exactly what startups were going through. They understood startups. They helped us find legal advice, et cetera, et cetera. The list goes on. So the question, why would anyone bank with SVB? If you're a tech startup, it's almost the opposite. Like, why would you bank with anyone other than SVB?
Yeah. Oh, okay? Yeah.
So literally a week before the collapse, we close our round, and I won't say details, but we had more than $250,000 in our SVB account, just a business checking account. All right. And it didn't dawn on me, FDIC, and talk about that later, whether that was irresponsible or not. But really, I'm not alone. Most businesses banking at SVB didn't split their accounts over, let's say you raised 10 million bucks. People didn't split that up into 40 banks. I mean, the accounting nightmare that would entail doesn't add value to the business. You'd have to pay one person to just be in charge of moving all the money around. So suffice it to say, people didn't do that. So Thursday, my COO gets wind of the troubles at SVB, and he spares me the agony of knowing about it, because at that point it just seemed like a rumor and he wasn't ready to act on it yet. Come very early Friday morning, he sends me a text and he says, listen, there's big trouble at SVB. We got to get our money out. I'm going to initiate a wire. Just around the same time, one of our investors who's tied into the scene contacts us. Hey, just want to make sure you know about this. We said, yeah, we're all over it. Now, there's a lot of talk about what happens in a bank run, and we can explain that in a minute. And there's talk now from people who are not involved, like, how come people didn't stay calm, or how come you didn't stay the course? And really, when it's you and your business, and you have a practical, prudent decision to make, you need to protect yourself, okay? And if it seems like everybody's running, you got to run too, all right? So
You
we
don't want to
initiated a
be. So
wire.
the bottom line is, when there's doubt in whether or not a bank can cover its depositors' money, which is exactly what happened to SVB. And I will, if you want, we can talk about why it happened. But
Yeah.
when you are responsible for your investors, your angel investors, your friends, your family members' money that are stored at SVB, and also you're responsible for your employees and your company, right?
Yeah.
If there's any doubt whether or not the money will be there, you don't want to be the last person holding the bag.
Exactly.
You want to be the first person to say, hey, you know what? I sense trouble. I'm going to execute the fiduciary responsibility to my stockholders, to my investors, to my family, to myself, to my company, to my employees. You want to get the money out. And that's
Right,
what you
exactly.
that's what you try to do Friday morning.
We tried to.
Oh, no
So
kidding.
now,
Okay, tell me more.
So as it turns out, so we were, I mean, God, Friday seemed, every minute seemed like it was an hour. I mean, I kept refreshing the pages of the SVB account and refreshing the pages of the destination account, and nothing was happening. And I'm calling, and my COO is calling, and we were in limbo. And now fast forward, as it turns out, nobody got their money out on Friday. It didn't matter when you initiated a wire. The federal government stepped in and seized the bank and froze all money going in or out.
Because they literally went in at 8:52 a.m. local time at SVB's headquarters in California. They literally stopped the bank from actually opening, so nothing was coming out.
Exactly. So let's talk a little bit about why it happened. I'll start,
Sure.
and you can fill in I mean, I'm not an expert on this, but I I know enough after going through this turmoil. So on a very basic level, when people deposit money at a bank, all that money is not actually there at any given moment in time. So if you run a bank and you have deposits in checking accounts, saving accounts, money market, CDs, at any moment in time, only a small percentage of that money is coming in and out that you need to have in cash on hand. And the rest is just sitting there. And the bank has to make money. So you're not just going to let it sit there. You're going to invest it. And it's understood that that's how banking works. And ever since the financial collapse of 2008, the government created some stress tests and some limits and how much you need to have and how much can be invested in risky assets and how much need to be in safe assets. And I don't know the details there, but suffice it to say, a run on a bank is when everybody goes in to try and take out their money at once. And if that happens, really no bank can, or very few can survive a run because you don't have 100% of deposits on hand. Okay, so that's the foundation. Now, what did Silicon Valley Bank do? Silicon Valley Bank took a significant amount of those deposits and invested it in long-term U.S. Treasury bonds. Now, that's not risky. It's actually very safe. Like, what's safer than U.S. Treasuries? The problem is that they bought long-term bonds. Now, it's funny. In my personal finance talk, I have two slides that are relevant to this. One is I said you have to remember, if interest rates go up, the value of bonds go down. And I say in that talk, forget about why, just memorize that. Okay. And then another slide says, try and keep your bond maturities short because the ravages of inflation won't have as much of an impact. So here they had very long-term bonds. They knew interest rates were going to go up, but they didn't know they were going to go up really, really fast. At the same time, all of these tech startups have had a year where they've had a little bit of trouble raising money. 2 great years followed by a not so good year. So what did they do? They started burning more of their cash and withdrawing money, more than the bank anticipated. So the bank had to turn around and sell some of these long-term bonds. If
At a
you hold
loss,
those
at a
bonds
significant
at a
loss, like
exactly. So if
$1.2 billion loss.
exactly. So they lost, I think, almost $2 billion having to sell those bonds before maturity. So if you hold on to them till the end of the agreed upon time period, you get all your money and all the interest. If you sell it before, it's at a loss. So they lost $2 billion. Now, keep in mind, this is a $180 billion bank. $2 billion is not that much compared to the total value of the bank. But they turned around and they said, all right, in order to get our balance sheet back to where we want, we're going to raise capital. We want to raise $2 billion. And the way they did that, the PR of how they announced that was not great. And all the VCs and the market took notice and said, holy crap, there's something wrong with SVB. And then the sort of herd mentality set in and initiated. I'm sure we'll find out more, but the rumors are that Peter Thiel, famous venture capitalist, and maybe some others initiated this frenzy. But again, they probably were only looking out for themselves. And if you, similar to my situation, which is small potatoes, if each person simultaneously is looking out for themselves, it can create a domino effect. So there was a run on the bank, and people withdrew $40 billion in 48 hours?
Uh-huh.
And so the bank became insolvent. I've been talking for a long time. Let me pause there. But that's the basic story.
Yeah. Basically, and you think these are supposedly pretty smart people, right? Running these banks. Why did they invest in long-term bonds when it's not like this is any news that inflation is in play? Then it begs the question, why did they invest so much in long-term bonds? Like you said, bonds are extremely safe. And for a lot of people, it should be part of your portfolio because you want to diversify, right? But like you said, you want to keep it short-term because when interest rates go up, like the Feds are thinking about possibly doing again, they're really caught in a rock and a hard place right now. So if you increase interest, then the bond value goes down. And it's not like this is anything new to common folks like me. So why did they, anyway, that's something that smarter people will look at and try to figure out post-mortem now that SVB has been taken over in receivership by the FDIC. So, anything else before?
Well, I mean, let me just tell you a little bit about how my weekend went from there.
Yeah, that's what I really want to know.
So listen, I've been reading so many articles about this since, and it's easy for people who are outside of this world to point fingers and say, these stupid business people, they knew that they had more than $250,000 in the bank. And so really they should get their just desserts. There should be no government backstop. They knew what they were getting into. And let me just tell you that, that's just an overly simplistic view looking from the outside.
I have to agree.
Many businesses have over $250,000. In fact, some huge companies' payroll is that in a week.
Exactly. That's exactly right.
Now, people also pointing finger, well, yes, you should know, and you should have split it up into multiple banks. It's an accounting nightmare. All right. And so, I mean, to point a finger at a bank and say, you idiot. I mean, think about it.
Well, you can't really
blame myself.
You can't really blame the individual depositors because I looked at this situation from my personal perspective as well, running a small practice. I also have personal money in the bank. I looked into the FDIC coverage before even any of this even happened. But like you said, it is an absolute logistical nightmare to have to.
I mean, people will do this now.
Yeah. So many different accounts, so many different banks. Granted, you can have so many different, if you have a trust, then you have multiple trustees, then you have to go back to the lawyer, make sure you restructure your trust just to make sure you have FDIC coverage. And so what if you have FDIC coverage? If the bank goes down, it may take some time. It's not just FDIC comes over and then everything's okay. If you have a lot of money, then you can't access all of that at the same time. So anyway, go
Yeah.
ahead.
So no, yeah. I mean, I think that's absolutely right. So I spent the weekend really. It was one of the most stressful weekends that I've ever had, because when you start a new company, like a startup, you're well aware of all the reasons why it might fail. You might not achieve product market fit. People may not want to pay for your product. The market may not want what that thing that you've got. But putting money in a checking account and the bank becoming insolvent shouldn't be one of the reasons
Yeah.
why the enterprise sinks. So I was consuming every live podcast on the subject and like all the talking heads in the tech world, and there was a prevailing opinion that the Fed was going to backstop things on Monday, as they did, but a lot of that was wishful thinking. I mean,
Yes.
truly nobody
Yes.
really
Nobody
knew
knew.
what the hell was going to happen.
Yeah. Whether
And I
there's a
was
white knight that's come in and take over and buy the defunct bank, or the Fed coming in, stepping in. But then
Yep,
on
exactly.
Sunday anyway, go ahead.
Oh, so I mean, my first thought was that somebody was going to buy the bank because it's still an attractive asset and they have attractive clientele, and there was no fraud involved, and so I thought it might still be an attractive asset, and I wasn't alone in thinking that. But as Sunday wore on, it became clear that probably wasn't going to happen, because they would have announced it. Meanwhile, the Fed and everyone else is very aware of when the Asian markets are going to open. Okay. Because if you don't resolve something by the time the markets in Asia open, you can start you can allow a global financial meltdown to happen. So the Asian markets are looking for some kind of reassurance that the US has got this under control.
But before the Asian market, what did Yellen say Sunday morning?
Oh, wait, remind me.
What did Janet Yellen says? We're not gonna bail out the bank. She's not gonna do what she said, that she's not gonna do the same thing that they did back in 2008.
Right, which was confusing.
Yeah, exactly.
Yeah, what she meant was, we're going to let those executives and the shareholders out to dry.
And
we're not going to help them.
Ultimately what they did do. Yeah.
And so so this is not a bank bailout per se. It's not like those
Sort of.
I mean, the executives are going to still be fine. Thank you very much. I'm sure they're all quite wealthy, but
and we won't even talk about how they sold off SVB stock a week before.
In the weeks, yeah. Do we know yet if that was an automatic?
We don't know. We don't know yet.
We don't know. Yeah, that'll all come. That'll all come out. So yeah, I mean,
so before the Asian market opened, they knew they had to do something.
That's exactly
on
right.
Sunday. Yeah.
Yeah. And I got to say, I from my perspective, they did the right thing. And you also don't want this to really become a political thing. It really shouldn't be a political thing. It should just be a scenario where the depositors needed help and the government stepped in. It really shouldn't be a partisan thing. But although it will become that.
Oh yeah, of course. Yeah, the GOP is going to say, "Oh no, you did too little," or the Democrats are going to say you did too much. You can't make everybody happy. Just like seeing patients, you can't make everybody happy.
That's exactly right. So now the question is, was there anything more you wanted to talk about that? Because we could talk about where does that leave the average doctor?
No. Tell me about what happened to your assets in the bank. Because
So we get notice. Yeah, we get noticed on Sunday that all the funds will be available on Monday morning.
Okay.
And I mean, God, there was like such a sense of pure relief. I didn't want this to be the reason to go down. And really that was the right move, because there would have been a nationwide or maybe global lack of confidence in banks, justified or not. If you start having a run on community banks, it would have been a situation where people would have said, the only place I can have my money is Bank of America, JP Morgan, and
Chase and Wells Fargo.
whatever, Chase and
Yeah.
Wells Fargo. Those four. And then you'd have too big to fail banks again. There was really, they really did the right thing. Now
Yeah, it
there's
depends
been a
on your
lot, but
perspective.
still there's a lot of backlash. Though.
Oh yeah,
I mean,
you can also talk about. I mean, obviously they stayed off the contagion, but then you have to address the moral hazard of exactly what they did.
Yeah, you know, I hear that. I'm too close to it.
To be
I mean,
objective.
I would ask people to put themselves in my shoes or in the shoes of a business who, you know, startup businesses are not started by billionaires or millionaires. They're started by people who are looking to improve the world in some way, who have to pay ordinary people salaries like software developers and web designers and people who are not making a ton of money. And God, I mean,
And
if the
just for
biggest mistake, yeah,
Wellprept, I'm
yeah,
sure I mean, obviously you have employees, right? And you have to sustain the corporation. And also
yeah,
you have software costs like Azure or AWS that you have to pay. And then
yes,
cybersecurity,
we are. You
hosting.
got it.
Yeah.
You got
So,
it. I
so
mean,
if
you
you
know,
were to
I would.
shut down, there are tons of secondary and tertiary consequences that people don't even think about. They just think, oh, you know what? Startup, VC, tech, you guys are rich people. Who cares about you? Let it fail, let it burn. But it's not that simple. You have to think
It's
about the
not that simple.
secondary and tertiary
It's not.
consequences. The employees who may be able to afford childcare now all of a sudden will not be able to if you can't make payroll. So it's not just, let's just
Yeah.
shut it down. So I'm empathetic to what you went through. But on the other hand, I'm also thinking, well, then you have this moral hazard. Now the Fed then you allow the banks to essentially do whatever they want, right? The Fed now, the FDIC is saying that we'll come in and we'll bail you out. You continue to do your misdeeds, right? That's
Yeah,
a balance that you have
I can
to.
see that, but one missing piece is, and I tried to look this up before we went live, but I didn't have time, is I have heard that SVB was in compliance with stress testing. I need to verify that. Do you happen to know off the top of your head?
They
Because I don't think that they were.
correct.
No,
I believe they were in compliance, but why did the board or the advisors let them purchase so much long-term treasury
long-term
bonds,
bond.
knowing for years now, we knew that this is coming. We knew, the average Joe like me, even I knew that inflation is at play. Why did they invest in so much?
I mean,
and
I hear that side. The other, but the flip side is we all knew that rates were going to rise. We didn't know that they were going to rise so fast, so quick.
that is true. That is true. Yeah.
And you know, they are really smart people managing interest rate risk, and you know,
Well, I don't know. They
so
didn't even have a risk manager at SVB for 8 months.
is that right?
That's correct.
Is that right? Yeah, I mean, this kind of thing is all gonna come out. But you know, if someone's position out there is, you know, they knew, you know, the businesses knew they were over the limit, let them fry. I mean, you can't have thousands of companies fail because they put money in a checking account. I mean, that can't be the death knell to thousands of companies. It just can't be.
No, I agree. I mean, that
Especially
probably
when,
kill a lot of American innovation right there.
yeah,
If you let SVB fail and you have all the startups that the SVB is involved in fail, then that's a huge setback. Not to even mention all the potential local and also international economic impacts.
yeah, and you know, this is not an excuse, but it was common practice not to worry much about that FDIC limit. That'll change now. In fact, I've just become aware of, I didn't know of this phenomenon, but there are banks now, like Mercury Bank is an example, where in the background, they distribute your money between many banks. And so by having a deposit at Mercury Bank, you have $3 million in FDIC insurance. And I think we're going to see a proliferation of a lot of these sort of shell banking services that do the job behind the scenes of distributing your money so that you are covered beyond the limit. I don't know if you'd heard about banks like that.
No, I haven't. And I'm sure there will be some service that you can pay some slight premium so that you can have your $400,000 for your payroll, and it's going to automatically handle the distribution to balance things out. The FDIC limit has not changed for quite a while. And I think in light of what's going on, what has happened, they should consider, well, maybe, or you know what? On the other hand, they can just leave it the way it is because they have the backstop of the BTFP, Bank Term Funding Program, that they are using to cover themselves.
Yeah, but I'm glad you mentioned that. The limit for 403B investing, 401k, every couple of years, it goes up. It's indexed to inflation. The FDIC limit hasn't gone up since 2008. Before 2008, it was $100,000, and in 2008 they raised it to $250,000. And this weekend, in my frenzy, I calculated what $250,000 in 2008 dollars would be today, and it's almost $400,000. So that limit is long overdue to be raised, and maybe there should be a higher limit for business accounts. I mean, a personal account needs a lower limit than a business, and maybe it should be tied to the annual revenue of the company. I mean, or payroll demands. It needs to get more sophisticated. 250 is too low for most businesses.
Oh yeah, no kidding. I mean, just for a small urology practice like mine, you know, that's the limit's already exceeded because depending on what you do in your office, every month you're writing a lot of checks, so you need to have those funds available, liquid. I can't even imagine.
Well, let me ask you: Are you changing that now?
Oh,
because I'm sure people are interested in knowing.
Yeah. So personally, I'm definitely going to be spreading that out. I currently have 2 different banks because I looked at this situation a long time ago, the FDIC limits, and that's how I know about the trust issue. That if you have a revocable trust or irrevocable trust, the limit is per trustee, $250,000 per trustee. So if you have more trustees in your trust and you open the account in the name of the trust at a bank, every trustee is covered by FDIC for $250,000. So anyway, or here's the other thing you can do. At a single institution, you can have multiple accounts and have multiple tax IDs. So I have multiple corporations. I have multiple IDs. I just have to open up multiple accounts at the same bank. I have full control over the funds. So I can transfer the funds and balance it out so that it would fit the FDIC limit. So that means, again, somebody else has to manage the accounts, transfer money back and forth. And I'm sure there's going to be automation in the background that can be done, set up by the banks. Yep.
I think for the Facebook group, it's worth mentioning. You covered the business side of things. I think that limit probably does apply to people who are out in practice. But for personal banking, I'm just going to go out on a limb and say that very few of us probably are sitting on over $250,000 cash liquid in a bank account. And I would go even further to say, if you do, I don't know why you would have that much. Nobody's emergency fund needs to be that high. And the question is, why do you not have that money working for you?
You could be Asian. You could be Asian. And you're used to having money under your mattress.
So you think that's an okay thing?
No, it's definitely not an okay thing.
So if you're out there and you have that much in your checking account, my advice is you should be investing some of that. At least let it grow faster than it could getting savings interest.
But if you put it in the market, there are risks, as we are seeing right now.
As long as you absolutely, as long as you don't need it anytime soon.
Well,
in your time horizon,
you can also put it in the federal money market account, right? Which is yielding around 4.5%.
Yeah, right. Yeah, not too bad.
Well,
4.5%.
relative to inflation, it's not good, but better than sitting at a bank at 1% or less than 1%.
Right, right, right. Now, people are wondering, what's the chance that the FDIC backing of that 250 somehow, is there a chance that they wouldn't back it in the scenario of a bank run? That's never happened before. They get that money from a fund that banks pay into. Banks are required to, if you offer FDIC insurance, you have to pay into this fund. Now, what's going to happen is the fund, I'm guessing, is going to be almost drained in order to pay for this SVB debacle. And then they're going to levy some kind of fee to make the fund whole again to participating banks. So there's an argument now.
But I also just say that even if the FDIC cannot cover the 250 insured amount for all depositors, it is backed by the government. So you're safe there. But that's never been invoked, never been used.
Right.
Thank goodness.
That's a good point.
Thank goodness.
Thank God. Thank God. Where else can we go with this?
Well, most of the depositors, I mean, over 90% of the deposits at SVB are uninsured, meaning over 200, the balances are over $250,000. How is the FDIC covering those amounts? Because everyone's worried about taking a haircut, right? It doesn't seem like that is going to happen. Or if it is, it's going to be minimal. What do you think about that?
Yeah, I mean, they have assured, the U.S. government has assured us that first of all, SVB has assets. So I have to imagine that some of that will be covered by the sale of those assets. And then any difference would be, they would dip into the FDIC fund. I mean, they've assured the American people that it's not going to, that they won't bear any additional tax burden in order to pay for this.
I don't know.
Do you have any other thoughts on how
I don't know about that, but how can you, so if you look at the BTSP, Bank Term Funding Program, BTFP, if you look at that, they're taking the collateral at face value and paying that amount.
Yep.
How that just doesn't make sense.
How can they?
Yeah,
where does it come from?
Exactly. Somebody's got to pay for that.
You know, somebody on Twitter actually put up the balance sheet and made these accounting, answered this question. I can't remember the answer though.
Yeah. So anyway, there are a lot of moving parts. For most people, they couldn't care less. But for pretty much any size business, they should be paying very close attention. And I'll tell you, you have
to sort of take our word for it that even though most people don't care, if the deposits were not guaranteed, it would have impacted all of us.
Oh yeah,
the whole idea of contagion.
The thing is the confidence. It's the consumer confidence at these banks. I mean, I literally went to a bank yesterday and I made some moves and closed some accounts and moved them somewhere else outside of the bank as a result of what happened this weekend.
Wow. So
yeah,
I got to tell you, behind the scenes, it's very interesting. I've gotten at least 4 emails from SVB, global emails to all clients begging people to keep the money.
That's bad.
SVB.
That's bad.
It's bad. It's a bad sign. And beg people to take the deposits that they took out and bring some of it back.
Yeah. So right now, the big four, they're seeing a huge increase in deposits.
Yeah.
And it's interesting. Bank of America. Yeah, it's interesting with many people going to bonds. Now you see the bonds, the bond prices are going down. I mean, it took a hit today.
I saw that.
Yeah, it's crazy. And then on top of that, you got the Swiss bank having issues and this is just like the perfect storm for something bad to happen.
I know. So, by the way, along those lines, if anyone's out there saying, so what does this mean for my 403b or 401k? Should I make any moves? And the answer is no. As long as you have already thought through your own risk tolerance and you have an investing plan, and then there's no reason to change it based on these events.
Yeah, I have an automated monthly dollar cost averaging going into an index fund. So
exactly,
that's not changing.
Okay. So if you had a plan, then there's no reason to change it.
Index fund and some other stuff that automatically happens. So I don't even think about that. I'm just looking for bargains right now. See if there's anything out on fire sale. No, I'm not buying. I'm not investing in SVB though.
You're buying banking stocks, financial services stocks. You don't have to tell me.
Maybe Citi.
Yeah. Yeah, I mean, people are looking for deals out there right now.
Yeah. Well, anyway, as always, this is not investment advice, and you should consult with your own financial professional for your particular situation.
Yeah, we're just two people who barely know what they're talking about talking to each other.
There you go. And let's see. Daniel, I'm just going to go over the comments. Daniel said, thank goodness, glad you will get your money back regarding your deposit at SVB. And she also said, my dad's practice has been embezzled twice and his surgery center once. And she now considers my accounting nightmares with multiple accounts a total blessing. The nightmare is totally worth it, in my opinion. It's actually saved me aggravation. So having your investment diversified is a good idea. And it sounds like in her situation, having your money diversified at different accounts in different banks may be something that all businesses should consider doing if you're holding on to a lot of cash.
Yeah. Yeah. Sounds like a lesson learned a totally different way. Embezzlement.
Yeah.
I think this is going to be on everyone's radar now. But it's sort of like, the power goes out in your house. So next season you buy a generator and then the power never goes out again.
For 2 decades. Yeah.
For 2 decades.
Yeah. People tend to be reactionary and they don't think about the worst case scenario. But if, a lot of people are going to precious metals, and some people have been advocating for the acquisition of precious metals and mining and things like that. Well, I'm thinking if we ever have to go to precious metals, I'm going to start stockpiling firearms and also ammunition,
weapons,
and also ways to start fire, because I'm going to be burning the cash to keep myself warm, to cook and stuff like that. I wouldn't care about the fiat currency that we're dealing with, and also I wouldn't. So what if you have a piece of gold or silver? Really, are people going to care about that? Probably not.
No. It's only worth what the next person will pay for it, which in that scenario is probably nothing.
Yeah, exactly. And then how do you explain cryptocurrency? Anyway, so I digress. No intrinsic value.
I agree.
All right.
I agree.
Dave, anything else?
No, I think we covered it. That was a lot of fun.
Yeah,
thank you for having me back on.
Hey, thank you so much for jumping on and taking this call while you're on call for your group. Sorry to bring that back.
Well, it was good karma because my phone didn't go off.
Yeah, well,
we should do this more when I'm on call.
We'll knock on wood, right? And I'm so glad that you have access to the funds from your seed round. And best of luck with Wellprept. And I think for practices that have not looked into it, they should definitely look into it. Can you give us a 30-second elevator pitch about Wellprept?
Elevator pitches, it lets you send homework to your patients so that in clinic you can stop all your repetitive spiels and you can focus on patient care. If you want to check it out, it's wellprept.com, WELLPREPT.com.
And I have no financial interest in the company, so just so that everyone knows, disclosures and things like that. Let's see, some more comments. Let's see, let me chat it out. Minnie said, do you guys feel the system worked, meaning FDIC and Frank Dodd and the government stepping in? I think we covered some of that. It's been almost a century since Black Monday, and this could have escalated, but to the government's credit, this was managed before that. Yep, that's exactly right. Before the contagion took place, and I think ultimately it's the right thing to do. It's the right thing for many, many reasons, even though, the moral hazard is set, and that's something that we'll have to live with. I think for the greater good, I think this was the right thing to do, irrespective of what each party may think. Kashif said, great talk. Thanks for sharing this SVB. This SVB debacle also makes the point that most of your personal money should be sitting in hard appreciating assets in addition to the brokerage accounts. What do you think?
Well, I would point out, first of all, brokerage accounts are not covered by FDIC insurance. They're covered by SIPC, and so that's a different story. And still, you should not consider your brokerage funds to be really insured in any way. And the chance of a brokerage firm becoming insolvent, since this person brings it up, is quite low. And most of us use some of the biggest firms out there, like Fidelity, Vanguard, stuff like that.
So if Fidelity or Vanguard were to go down, then again, I resort back to
then we're at the end of the world.
Yeah, I resort back to my firearms and ammunition.
Exactly.
All right, Minnie.
I'm running out of karma because my pager just went off. So
Okay.
it's good timing.
Last question. Minnie said, of course, SVP apparently was in compliance with all regulatory rules, and still somehow this happened. Was it all just due to mismanagement of assets by SVB? I think it's number one, mismanagement, and also number two, the bank run that took place because of loss of consumer confidence, depositor confidence.
I also think people are going to look back at this as a PR disaster.
Oh yeah.
When the CEO announcement was everybody stay calm, that was not one way to make sure no one stays calm is to say
for a bank CEO to say stay calm, everything is okay. It's kind of like the government coming in and say, hey, we're from the government and we're here to help. With that, I will end. Thank you so much again, Dave, and best of luck with your venture.
All right, thanks, John. It was a lot of fun.
Hope it was a nothing call.
Yeah, well, we'll find out.
All right. All right, for those of you who have stayed this long at the end of the live stream, as usual, if you have any comments, questions, suggestions, agreements, disagreements, please feel free to leave them below. Thank you so much for the privilege of your time. Please take care of yourself and take care of each other. Bye-bye.